So let's look at a euro-dollar chart. We usually start with the weekly chart, and after the big decline, which was at the end of March, this big red candle engulfed several previous bullish candles. We can see that the single currency is going to the downside. Here is the daily chart, and we can draw a support line through the recent minimums of the euro dollar, and we will find out that the single currency is now trading below this support line. What is happening with the euro? Firstly, a main negative factor which contributed to this decline in the European currency was that the European Central Bank clearly still doesn't think that the rise in inflation is sustainable. Mario Draghi, the ECB president, said that he doesn't see the cause to deviate from the ECB's stated policy path, which includes bond buying at least until the end of the year, and record low rates until well after to stimulate inflation. Accounts of the central bank's March meeting showed that the regulator is rather pessimistic about the region's economic outlook, and as a result, the outlook for the euro has darkened. We expect that the single currency will be feeling the pressure from the ECB's dovish stance. And the fact that we are now below this trendline support is negative for the euro. It also contributes to the fact that we should focus on the downside targets. Other news which we released last week included an unexpected increase in German industrial production. However, French industrial activity, on the contrary, contracted, and so did Italian retail sales. So we can't even say that there are positive economic figures out of the euro area. If we look at the economic calendar for the upcoming days, this calendar includes German and European economic sentiment and industrial production on Tuesday. And on Friday, there will be a bank holiday in Germany. This is all to look at in Germany. So, and the euro area as well. So, once again, the idea is that the single currency is able to test lower levels in the coming days. Here you may see the red and blue lines. This is an indicator called pivot point multi-time frame. And if we look at the currency pair from the weekly perspective, I find that this weekly pivot and weekly support often gives a good idea of how that currency pair may be, and it gives us some good levels where we can place our targets. So you may see that the euro is trading below 106.18 level, which is the weekly pivot level, and it means that the bears are in control of the situation. Also, I point out to the fact that at 106.18, we have another resistance in form of 100-day moving average. And while the currency pair is trading below the weekly pivot level, it is inclined to visit support levels, which are here in bright blue at 105.50, 105.09, and the last weekly support is located at 104.40. Of course, levels in the area of 105 should give the euro significant support. This is an important support area, so we have to take these facts into account while we are trading. But there is some scope for the euro to test lower levels. The political factor, the French presidential elections, which are going to take place in 2 weeks, for now represent a more negative than positive element for the single currency, as the less time until the election, the more risks the market players see. Until this event is out of our calendar, probably the demand for the euro won't be very high, as traders who had seen some unexpected results of elections and referendums last year would likely prefer to remain on the cautious side here. I have read several forecasts today from big banks who think that actually time is getting closer of a reversal in the euro-dollar to the upside, and this will happen after the French election. If Emmanuel Macron wins this election, then there will be a relief rally in the single currency. And well, I tend to agree with this idea. I think that there should be a relief, and probably the single currency will make another attempt to overcome 109 mark and probably visit even higher levels. But if we are giving the short-term forecast, if we are looking at the perspective of the next days, if we are looking at this week until Friday and including Friday, then I would say that it is a more suitable time for holding euro short positions or some small bets that the euro will test lower levels. This idea is confirmed by technical picture, plus we should remember the US dollar index chart, and there we can see some scope for appreciation in the US currency, which is currently benefiting from increase in the markets uncertainty, in the market's risk aversion. We saw the spike in geopolitical tensions that helped the greenback appreciate versus their higher risk currencies, and versus euro it also acts this way, as I can feel from the fundamental picture. So euro is vulnerable for lower levels. If we look at the 4-hour chart, we can see that there is some divergence in indicators like MACD and stochastic, and from current levels, the single currency may try to consolidate a bit to test resistance around 106.18 and maybe the next resistance, which is located at 106.57, before it continues its way to the upside. Still, the moving averages on the 4-hour chart are in the negative state. There is soon an intersection to be between the 50 period moving average and 200 period moving average, and this shows that some further downside potential exists for this currency pair.